Good afternoon, everyone. Welcome to the midday update. I am Laz. Pretty volatile session so far. I got a lot to cover, so we're going to jump right into it here and go into our charts. We're going to start with the S&Ps. We'll actually look at the S&P 500. And as far as corrections go, it looks like this correction, kind of what I anticipated. If you go back a few days and watch my updates from a couple days ago, I talked about a pullback, and then maybe another new high. So we got that this morning in terms of a gap up. Again, still focusing on our pivot highs, still lower highs in place. But we've seen a really aggressive snapback here in the market over the last 7-8 sessions. And that continues today with this gap up. We saw a nice reversal yesterday and then a gap up into this morning. So, we're going to look at some leadership here in a couple of seconds. But as far as the market goes, we still have to respect the fact that we're really not out of the woods, in my opinion, until we really clear this level. This is, again, our prior pivot high. And that comes into play around 1435 in the S&Ps. If we were to get above that level and then pull back, that pullback should be very viable, or could be very viable. Now, I'm looking forward, and I'm making sort of I'm speculating about what potentially could happen. So until we really clear this level, again, to me, you got to be very careful about chasing and so on and so forth. This market has become very, very volatile intraday. You're seeing a lot of intraday whipsaw in definitely some of the higher beta symbols. So we're keeping an eye on this market on a day-by-day basis at this point, but definitely constructive price action. You got a 2 to 3 day consolidation, and we did break above that this morning on this gap up. Let's take a look at some banks. I always like to look at banks just to see if they're participating. This is Goldman. Not really much in terms of participation here today with the market. So you're seeing some relative weakness. JP Morgan gapping up, but really no enthusiasm here on this trade. So banks, to me, speculative. I do like to see bank participation when the market rallies, but it's just not quite there. It's really a lot more in some of the high beta names. Amazon, an interesting chart. Really, to me, very, very difficult to trade. I'll tell you why. Because we are back into resistance. We look to the left up here. This is sort of our prior resistance zone. And we even go back a little further, you can see how this area 250, 251 has been sort of that benchmark of support resistance. But since the lows were put in down here around 218, you've had 9 straight up days and never really a pullback. We never really got any sort of consolidation in here. It really has been sort of a blast off type of trade. Very tough to get involved with these from the long side, only because, like I said, really never much of an opportunity to buy pullbacks. As a trader and even more as an educator, I'm always telling traders to look to short bounces on the downside and buy pullbacks on the upside. And never once did this particular stock give you a pullback. So interesting area that the stock is sort of hovering at, prior resistance, off the 21 EMA. You might see a subtle new high and then some sort of pullback. I do suspect that will be in the cards. If not today, within the in the very near term here, as the stock has thrust itself back into resistance, and in order to leg higher, some sort of consolidation or pullback will need to occur here. Apple gapping up, this morning with the market, but languishing. We had this 590 area of resistance that kind of presented itself, a day or two ago. You can see, Apple rallied into 590 and found a little bit of resistance up here. Gapped up this morning, subtly, traded above 590 for a few minutes, but now sort of sitting at that 590 level, and really no intraday enthusiasm here. So my word of advice is kind of just let this be as it's going to be. No reason to, jump into the long side here, and not necessarily a short at this area, at this level, with this structure happening. So. Let's look intraday here at Apple. Here's a 5-minute chart. We got that initial, down move off the gap up, and then, it snapped back and, it made a new low. And, it's sort of this ebb and flow type trade. This, to me, intraday is, a sign that this is some hard money right now. Let this stock kind of consolidate and drift around until you get that nice volume surge and that next potential breakout level. So, some hard money there. Yeah, in my opinion. Going back to the daily, Google, we saw a nice pop yesterday. Into resistance up here. Again, always look to the left, find your areas of, prior support, prior resistance. Trading into that resistance area, a little bit of a doji today, selling off. Short term, it's had a nice move from 660 up into today's high around 690. So a nice $30 move in 3 days. Probably could use a couple of days of consolidation, if not, a little bit of a pullback here. And Priceline, the other high beta name, held the rising 8, broke out yesterday. A little bit of follow through this morning, trading into this open gap that we saw, created from earnings season, a few months back. This big open gap here filled around 670, 680, where the stock, rallied into today and tailing down subtly. So, the interesting thing here is that we've seen, some stocks have some pretty aggressive moves to the upside in a very short amount of time. Depending on where your attention is and what you're looking at, there is opportunity. It is a very, very volatile tape. Let's go and just pop into this, look at the SPYs here for a second. Big reversal yesterday, and we can look at a smaller time frame. Here's a 10-minute chart. You can see, gapping down yesterday, violently snapping back, gapping up this morning, and news out of Washington causing some real violent ebbs and flows here. So be very, very careful today. Market just doesn't seem to have that feel to me where you're going to see a breakout to higher prices and maybe not a breakdown to lower prices. I would trade this tape very cautiously. We are now 12:30. We're midday. And, right where we opened, you can see this is sort of the opening price this morning. And, throughout the first, 2.5, 3 hours of trading, we really haven't done much other than sort of, test highs, test lows, and we're sort of hovering in the middle. So, trade this day very cautiously, I would say. Yeah, I really have been saying all morning, I think less is more. Some stocks are at some interesting areas of resistance, and, there's some things happening that, we could see a little bit of a pullback or potentially some consolidation at these areas. Which is why I'm hesitant to sort of throw out any new great trading ideas. Lastly, we'll just look at RIM, which has been a fairly good trading stock over the last couple of weeks. Gapping up this morning, I believe there was an upgrade, but gapping up into resistance. How do I know resistance? Well, I look to the left and I go back and I find prior support, and you can see RIM here. In this area was support. Gapping up into this zone, and selling off a little bit. Probably short term, a little overdone to the upside, and this one could pull back a little further before it becomes a buy setup. It did pull back, into the 8 yesterday, and popped up and gapped this morning. So some interesting trades, but overall, I'd say, just from my, from my opinion and based on my background, how long I've been doing this, this is a little bit of a tougher trading tape. You have to be very, very quick. Day traders, this is where you thrive from that intraday volatility, but you have to be a confident, quick decision maker. Things can change on a dime, and it seems like every time news comes out of Washington, the market, will either pop or drop, and the movement is pretty fast. So be careful up at these levels, and make sure you're waiting for quality setups. As always, a plan trader is a profitable trader. Tune into the VTF. That's really where the opportunity seems to be happening right now, more of the intraday trading. And I will talk to you later. Have a great day, everybody.
Hi, I'm Sean Hendelman of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.